So good morning everybody, I'll try that again. My name's Leon Isaacs, I'm chairman of a company called DMA, London-based remittances specialist consultancy. But it's my pleasure to be here today as your chairman for what is probably a unique occasion. I've certainly never been to what I anticipate today will be all about anyway, which is really to hear about some revolutionary ideas. And I think obviously you've all received, hopefully, a copy of the agenda with the biographies, but you'll actually see that we're going to learn a lot about IndigoDigital's feasibility study. And I think just having looked at the amount of work that has gone in and the knowledge that has been pulled together, it's absolutely fascinating. But I think even more importantly is the way that they've turned that knowledge into a concept which we all hope will be phenomenally successful. So I guess we're going to learn a lot more about that today. And probably at a time when certainly migration and remittances and financial inclusion have never been more top of people's minds around the world. And we're obviously in Global Diaspora Week as well, so the timing is absolutely spot on for this particular event. From the agenda you'll see that we're going to hear from a number of different people, and we will learn some different angles covering migration, remittances, insurance, financial services, financial inclusion. But the day has been designed as well, so there's plenty of time for participation from everybody here. So we look forward to a very active and lively session on this Monday morning. I would like to just make a formal set of introductions. Although we want it to be informal, I'd just like to recognise our honoured speakers. We will be led off by Ambassador William Lacey Swing, who many of you will know personally, and I think you all know as the Director General of the International Organisation for Migration, and we're very honoured to have Ambassador Swing here. He will be followed by Ambassador Thomas Greminger, Deputy Director General for the Swiss Agency for Development and Cooperation. After that we will have a short video presentation from Martin Parker, who's the Chairman Global Partnerships at Swiss Re. Then you'll be probably disappointed to know we'll have to stop listening and then start talking, because that will be the lunch session. After that we will have a testimonial from somebody well known to all of us in the remittances world, Dilip Rata, who's Head of Global Knowledge Partnership on Migration and Development at the World Bank. And then I'm delighted to say that Bernd Reuter, co-founder and CEO of IndigoDigital, will share the main findings of his presentation, followed by a testimonial from Jakob Kellenberger, the former State Secretary and President of the International Committee of the Red Cross. And that will then be followed, I'm delighted to say, by a presentation or some comments on the importance of IndigoDigital's financial services platform for Morocco from His Excellency Ambassador Mohamed Al-Jar, Permanent Representative of Morocco to the United Nations in Geneva. And then after the coffee break we will then have a panel discussion between a variety of people who I'll introduce in more detail at that time. And at that point we will be open for all sorts of questions. So if you haven't learnt what you want to learn by that point, then you've got plenty of time there. So I'm really looking forward to today, and Bernd, thank you for inviting me to come and participate or to share in this. And without any further ado, it's my honour to invite Ambassador William Lacey Swing, the Director General of the IOM, to come and present to us here. In your packs you will see that there are biographies of all of our speakers, and I think if you read Ambassador Swing's biography, you've got the makings of an absolutely fascinating history, tremendous amounts of knowledge. I think somebody who's experienced things many of us can only dream of or marvel at. So I'm sure we're going to hear an absolutely wonderful set of opening remarks from Ambassador Swing. So I'd like to invite you up here, Ambassador.
Mr. Chairman, distinguished guests, ladies and gentlemen, good morning. It's wonderful to be with you. It's a great honor and privilege and pleasure to be here with you and to have an opportunity to share together how we might work together on the question of remittances for migrants. We're particularly pleased to be here for this workshop because, first of all, it's a product of a public-private partnership together with the Swedish Development Corporation, IndigoDigital, and IOM, and also because it addresses a topic that has been of special interest to IOM for a very long time. I want to make 3 points with a brief introduction before that. One is to talk about migration and development. Secondly, to address the costs of migration. And then thirdly, to talk about the value of partnerships. Let me start by simply talking a little bit about this very unusual era in which we live. We're in a period of the greatest human mobility in recorded history. Percentage-wise, it's still about 3%, but numerically, more people on the move than ever before, based on the fact that for the first time in recorded history, in the 20th century, the world's population quadrupled. This is going to continue, the demographers tell us, until well into the second half of the century, when the world's population reaches 9 billion or slightly more. So we have to deal with human mobility. Unfortunately, a growing percentage of that human mobility is forced migration. And let me tell you briefly why that is. Not only demography, but we're living in a period of the greatest number of simultaneous complex humanitarian emergencies in my long memory. And I've been around a long time, and I've been in diplomacy for about 50 years. I don't recall a time quite like this. Let me describe it for you. You have conflicts and problems from the western bulge of Africa virtually to the East China Sea. We have had in the Mano River Union of Liberia, Sierra Leone, Guinea, Ebola. We've had instability in Mali and Burkina Faso. We have Boko Haram in Nigeria in the neighborhood. We have the ongoing decade-long civil war in Somalia. Unfinished business in Libya and Yemen. We just yesterday took out 243 Ethiopians across the Red Sea, evacuating migrants by sea and by air to safety. We have the ongoing conflicts in Afghanistan and Iraq. There's the 5th year of war in Syria. There's the issue in Ukraine. And I've probably forgotten one or two. In addition, we have pretty much a vacuum of leadership and political courage in the world today. You have a serious erosion of international moral authority. And I think of my good friend and esteemed colleague, Jacob Kellenberger. We have violation of international humanitarian law on all sides, which I know is close to his heart, having been president of ICRC and still teaching in the area of IHL. We have proxy wars going on. We have at present no viable political processes, no active negotiations that offer any of us any hope of the short to medium term solution of any of these conflicts. And I'm speaking to you as a congenital optimist, so I've tried to put the best face I could on it. But it's a very unusual time, and migrants are among the most vulnerable, particularly when you consider that this is a period of the greatest anti-migrant sentiment in my memory, in which every person seems to be suspect, that every tourist might be a terrorist. I remind people that terrorists don't come with smugglers' boats. They come either, if not first class, they come business class. So we need to keep that in mind. They travel by less subtle means. So with all of that in mind, migration has become a major issue. It was a sub-theme at the UN General Assembly, which I just attended. So we need, we're pleased now that we've finally come to acknowledge that migration has some relevance to development and to prosperity. So when the Millennium Development Goals were established in the year 2000, they set the pace and the criteria for the next 15 years. Migration was glaringly absent. No reference to migration, no reference to population displacement. And we've worked hard, and I think we've been successful now, that migration is finally into the so-called Sustainable Development Goals that were just agreed upon last month at the Special General Assembly that I attended. Very pleased with that. We're in 4 of the 17 targets. Now the question becomes, how does an organization like IOM, how do we get involved in the review and implementation process? That's what we've got to be concerned about now. So for the next 15 years, the once estranged migration and development topic will now be inscribed on the agenda, and we will come to know each other better, both migration and development experts. The two parties have finally found it possible to identify clear and important points of intersection and cooperation. The new Sustainable Development Goals provide us a new vision then for the future, a vision that will embrace the contributions that migrants make and the contribution they make to inclusive growth and to sustainable development. So SDG number 10, for example, which is called Reducing Equality, it's of particular significance because it includes a specific target to facilitate, and I quote, orderly, safe, regular, and responsible migration and mobility of people, including through the implementation of planned and well-managed migration policies, unquote. So this is going to be a complex undertaking. We're going to open the way for new opportunities, but it will also give rise to significant challenges. Migration can offer generous dividends to individual migrants, to their families, and to their communities of origin, but it can also be a very costly enterprise, which brings me to my second point, lowering the cost of migration, which is partly why, I think mainly why we're here today. And I'm very grateful for this opportunity. Maximizing the benefits of migration and lowering the costs is an objective that we often encounter when we speak about migration. It's become so familiar that it's often put forward as a policy incantation with little, if any, power to make it happen and to make things change for the better. But there are real costs to migration. To give you an example, $27 billion have been lost since the year 2000 right here in Europe. 16 billion that migrants paid smugglers to get into Europe. We have visa policies that are pushing, they're actually subsidizing the smuggling industry. There's so few opportunities to migrate that people pay smugglers. 16 billion lost. $11 billion lost on the number of people the European countries have deported since the year 2000. I won't give you the figures for the United States. I don't know them, but they're much higher, I can assure you. So 27 billion, that's been lost, whereas better policies could have made that money go to better purposes. Now, migrants themselves are keenly aware of the costs that they and their families have to pay. We're seeing it right now. Over the weekend, we passed the 3,000 mark on deaths in the Mediterranean. We've lost 40,000 people since the year 2000 worldwide, 22,000 in the Mediterranean, according to our publication last year called Fatal Journeys. Now, I can tell you, that figure is a gross underestimate. We don't know how many people were lost because, ironically, a kind of cruel irony, governments don't keep statistics on people lost on their borders or the seashores. So we're trying to change that now. We'll come out with another report next month, and I think it will show that the figure is even higher. And this is 3,000 only lost in the Mediterranean. It's more than 4,000 worldwide. So one of the costs we want to lower is the cost of the physical costs. But some of the costs are more readily apparent. Passport and visa charges, recruitment fees, and by the way, we're concerned about the corrupt migrant recruitment industry. We have another initiative called the International Recruitment Integrity System that would set up a set of global standards for recruitment agencies so that they would stop taking people abroad under a false pretext. Other sorts of expenses, often more significant, are less apparent. For example, there can be sometimes a very brutal career shift. You have Haitian doctors driving taxis in Miami. You have a fully qualified scientist and engineer, maybe serving as an automobile mechanic, what we call de-skilling, as this is now called. There are other very significant costs borne by the family as a whole. The cost of separation for their partners and family, the loss experienced by children when their parents go abroad. So all the more reason then for us in the international migration community to try to make a special effort to lower the costs of migration. And we're here today to talk about one of those, which is to lower the cost of transferring money home. Now, the remittances are the hard-earned money that migrants send every day to their loved ones back home, representing a vital economic lifeline for millions of struggling families around the world. This year, and you'll hear this from Dilip Rata this afternoon, our good friend from the World Bank, migrant remittances will exceed $500 billion, in other words, $500 billion, equivalent to the GDP of a small to medium-sized European Union member state, twice the amount of total foreign aid, and roughly equal to all foreign direct investment. Now, these are private flows. Maybe I should say, thankfully, they're private flows because governments can't get their hands on them. This is money sent home. The whole idea is to help the families back home. They improve standards of living in countless ways. They help make vulnerable communities resilient. For the recipient households, they increase household income. They provide financial expenses, resources to pay for basic needs. In disaster-prone areas, remittance recipient households are likely to be more resilient to the effects of a crisis. I mean, when the typhoon hit in the Philippines, the remittances did not go down. They actually went up because the needs were greater and the increase followed accordingly. Remittances are also a form of social insurance against political and economic crises and a kind of livelihood diversification, particularly in face of climate change. Now, one of the costs of migration is, of course, that of sending the money home, and this is why we're here today. According to the World Bank, the average global cost of sending remittances is about 7.68%. And I can tell you, particularly in Africa, it goes as high as 10 to 15%. Down home, where I'm from in the South, we would call that highway robbery, but I'm too diplomatic to use that phrase today, although I just did. This means that migrants and their families are losing somewhere around $40 billion a year that should be putting food on the table, children in schools, and providing basically care for the sick and elderly. That's not happening when you lose that much money. But through the Sustainable Development Goals, we're all committed to bringing these fees down to 3% or below. Some countries have experimented and been able to get it down to 1%. There are very few of those, and that takes real strong government engagement. But I think together with this project and several others we're doing, we can make a dent in this problem. And this is, of course, where the partnerships come in, and that is my third point, the value of partnerships. At IOM, we've made the reduction of transfer costs a priority. I've committed to it several years ago, and to do so, we've been reaching out to potential partners to be responsive to those who have sought our help. We're currently, for example, beginning the implementation of a project in Burundi with the Universal Postal Union, UPU, in Bern, and the Burundian Régie Nationale des Postes, who's our partner. We're aiming to make the post offices prominent actors in the remittance transfer scheme, and therefore lower the cost through increased competition. It's a modest project. We've gotten some funding for it, but not all that we need, but I'm confident we will get the additional funding. We're also promoting financial education of migrants. We would like to do a project of diffusion of relevant information on transfer costs. And to do this, we've entered into a partnership with TawiPay, which is a Swiss startup, providing this kind of information in real time on transfer costs, for example. And we hope that through a very effective marketing strategy, we can ensure that the information does, in fact, get to the migrants. And here, of course, with IndigoDigital, we're enthusiastic about their business model, and we think that it will, first of all, it will contribute to drastically decreasing the costs of transfer, and it will also allow migrants and their families to make informed choices about how to use their remittances. I think they're generally well used, but with some education, financial education, they can be even better used. So I think it's a great example of effective intervention, turning a challenge into an opportunity for growth and learning. So we're very pleased about this. We're very confident that we can begin to make a dent. We realize we're putting ourselves in competition with major economic forces, including a couple from my home country, which shall go unnamed, but which are very obvious to you. We need to make it clear that the prices that are now being charged simply are too high. It's unfair. Migration is going to continue to grow, and the issue of costs for transferring remittances is going to be real among us for some time to come. So that's more or less. Well, thank you very much for your patience.
Ambassador, thank you very much for those comments. You really put everything into perspective. Couple of numbers I remembered. I'm sure we're going to hear numbers today. I think the $16 billion you said that had been spent on migrants traveling, the $27 billion wasted in managing this process just within the EU is phenomenal. You also mentioned the SDG target of 3% of remittance prices. At today's global average from the World Bank is 7.6% or 7.68, I think, from memory. So that's roughly, with my basic maths, that's somewhere around about $40 billion being spent on remittance fees. If we could get those down to 3%, that would be a saving of $22 billion right there. So we're talking about big numbers here through a variety of initiatives. And I'm sure IndigoDigital and a number of others are going to tell us how they can play a role in helping us get there. Now I'm delighted to introduce Ambassador Thomas Greminger, Deputy Director General of the Swiss Agency for Development and Cooperation, without whom I think it's fair to say we wouldn't be here today. So we'd be delighted to hear your comments around the support you've already provided and your view on this whole space. So, Ambassador.
Excellencies, ladies and gentlemen, good morning. The President of the Swiss Confederation, Simonetta Sommaruga, highlighted in her speech to the UN Summit in New York last week the role of the private sector for the 2030 Agenda on Sustainable Development. She called on all actors, and not just on states, to work together. It is for us an undisputed fact that economic growth generated by the private sector is a key factor in the development of emerging and developing economies. This said, rapid and complex globalization processes have widened the gap between rich and poor. Globalization has accentuated global problems. Governments, development agencies have taken measures to mitigate some of these negative effects. Steps have been taken in recent years to reduce poverty and tackle these problems with notable results. However, there is no room for complacency. It will require considerable and joint efforts to achieve the Sustainable Development Goals that the international community has set itself just a couple of weeks ago. Cooperation between the private sector, governments and civil society will be necessary if solutions are to be found which have a large-scale impact on society, the environment and the economy. This is why Swiss Development Corporation is now working much more closely with private sector companies. The strategic objective to establish such partnerships is perfectly aligned with the new global framework for sustainable development. Particularly, the Addis Ababa Action Agenda on Financing for Development, the private sector has been called on to play a key role in the global alliances needed to achieve the ambitious Sustainable Development Goals. The Action Agenda is also understood as an instrument to unlock transformative potential of the private sector by ensuring multi-stakeholder partnerships. This is not a shift of responsibility from the public to the private sector that we are calling for, but it is an acknowledgement of a shared responsibility between all stakeholders. It is a recognition of the different roles we have to play and of the different comparative advantages we will bring to the table. Although development agencies and the private sector have gained experience in cooperation in recent years, the full potential of these private-public partnerships for development still needs to be fully exploited. More work needs to be done, in particular to build up trust between partners. Each must endeavor to understand the other's values, appreciate their interests, understand different corporate cultures, clearly define roles and responsibilities in order to be able to define and to reach common objectives. And this despite of at times diverging interests. The 2030 Agenda, and more specifically the Addis Ababa Action Agenda, not only enshrines a new paradigm of cooperation between the public and the private sector. It also formulates a concise but still fairly comprehensive approach to remittances and financial inclusion. Switzerland has actively advocated, jointly with partners such as IOM, IFAD and the World Bank, to move beyond the goal of reducing the transfer costs of remittances. But don't get me wrong, with a global average cost of little under 8%, 7.69% you have just mentioned, and in some corridors, notably in the global south, with costs reaching 20 and more percent, and this is probably what Bill Swing would call highway robbery, transfer costs remain an unacceptable and detrimental burden on migrants that need to be addressed. A simple 1% reduction of the transfer costs would equal to today roughly $44 billion more in the pockets of migrants and their families in developing countries. However, an equally important development potential of remittances lies in financial inclusion. We fully acknowledge the private nature of remittances and thereby the fact that they are not a substitute for official development assistance. However, we are convinced that facilitating the role of remittances as a driver of financial inclusion could contribute to poverty reduction, economic and social development, as well as financial stability in a very powerful way. We are therefore particularly happy that the Addis Ababa Action Agenda calls on all stakeholders to ensure the availability of adequate financial services to all migrants and their families, and the need to promote financial literacy. The agenda also calls on all to promote conditions for cheaper, faster and safer transfer of remittances, including by using modern technologies, reducing unnecessary barriers and ensuring competitive and transparent market conditions. We are equally convinced that with IndigoDigital we have found a partner with whom we can make a real difference on all these points. IndigoDigital is not just another platform to transfer money. It is a game-changing digital system, drastically cutting transfer costs and proposing innovative ways to promote financial inclusion by offering accessible, affordable, and secure financial products to migrants and their families. Our continuous support as a development agency to IndigoDigital builds on the overarching goal of reducing poverty of migrant family households. By lowering transfer costs, disposable revenue for migrants' families will increase to be spent on goods and services or to be productively invested to create additional sources of income. We also expect that IndigoDigital will strongly influence the market, lowering transfer costs of other providers in the respective corridors. Combining remittances with financial services geared specifically to the needs of poorer segments of societies will contribute to reducing income risks, achieving a more effective cushion against economic and market fluctuations, and saving towards larger investments such as children's education or setting up a business. We at SEC are quite excited about this public-private partnership with IndigoDigital, and I hope that at the end of today you all will be too. Thank you very much.
Thank you, Ambassador. That was great. I particularly like the mention of the word partnerships a number of times there, and I think that's what today is all about. So I think you've really sort of brought this together for all of us in the room here, and I think I'd love to hear more as we go through today on the nature of the sort of the public-private, particularly the link there, the public-private partnership. It's clear the Swiss Development Corporation is doing a massive amount of good with partners like the World Bank, IOM and so on, and I think also leading the way with some of these innovations with some of the private sector partners. I think it'd be great to share some of that thinking around the room. Now, just before we go to lunch, we're going to have a short video, so I hope this is going to work in a sec. It's from Martin Parker, who's Chairman of Global Partnerships at Swiss Re, and you're probably wondering, given the previous two excellent presentations, why we're now going straight into microinsurance. Well, the reason is that as the Ambassador just alluded, this is not just about remittances, this is about financial inclusion and financial literacy. And one of the key products product areas that it's viewed that migrants and beneficiaries of remittances would benefit from is microinsurance. But in order to be able to make that happen, you have to have a very high degree of automation to drive efficiencies and to help manage the whole process. So I'm not going to say any more, but hopefully that gives you a little bit of context, and we can run the video now.
Hello everybody, my name is Martin Parker and I'm chairman of Swiss Re's Global Partnerships team. As many of you will know, Swiss Re is proudly in its 152nd year as a private company, acting as a reinsurer, an insurer to insurance companies, and as a direct insurer to large corporations. There is a large protection gap in the world today. For example, over the last 30 years we've tracked the frequency and impact of natural disasters in terms of total economic losses and the percentage of those economic losses covered by insurance. This slide shows the growth of losses and all values being represented at 2014 US dollar rates. Urbanization, the concentration of assets, and the frequency and scale of Mother Nature's events all play a part. Overall, 30% of losses have been insured, with often very small amounts of cover in developing countries and larger amounts in the developed nations. Typically, the middle classes have good access to insurance. It is true that at the macro level, many of the uninsured assets are in the public sector, but we should not overlook the impact of these disasters on the lower socioeconomic demographic at the micro level. The Global Partnership team at Swiss Re focuses on closing the protection gap, and that's my principal purpose. And in that context, the microinsurance opportunity is an important topic for IndigoDigital. It will help low-income individuals and families to plan for and cope with financial shocks, the consequences of accidents or poor harvests or early death of family members. We are all very familiar with the financial inclusion efforts globally. Getting the unbanked into the banking system is important, not least to grant access to credit. It is our very firm view that credit should be supported by insurance protection. Imagine taking a loan and then being unable to repay it as a result of an accident or a disaster. The financial pressure will be worse than ever. You're poor, and on top of everything you now also have an unpayable debt to hold you back. Appropriate insurance can protect against this. As people begin to make their way out of poverty, insurance can sustain their progress by cushioning devastating setbacks. Most developing nations are systematically underinsured. We have a duty to help governments and people harness the growth and development opportunity that insurance offers. Taking a look at Morocco, IndigoDigital's first corridor, insurance penetration is something I'll describe, and it's the percentage of the premium divided by the GDP. The world average is 6.2%, while Morocco in 2014 was 3.2%. A little stronger in the non-life insurance sector, where Morocco is closer to the average. A World Bank SDC study from December 2014 tells us that only 53% of Moroccans have ever used banking products, and only 41% have ever used insurance products. And this, of course, adds up to a significant opportunity looking at IndigoDigital's first country of operation alone. Closing the protection gap requires a minimum of 4 actions that you can see on this slide. IndigoDigital can play a role in 3 of these. In public-private collaboration, and I'll say more about this later. Increasing access and distribution. IndigoDigital's core business will be working with the very same people who can benefit from microinsurance. And it offers a clear opportunity to cater for the fundamental needs of the clients. In short, we can and must overcome the existing barriers to insurance penetration by offering relevant products, affordability, trust, ease of doing business, and settling claims quickly. So let's take a look at the 5 ingredients that make insurance in the micro side a recipe for success. 1. The products must meet the needs of the client. They should be simple, easy to understand, offer good value for money. Accident insurance, life, disability, crop and funeral insurance are some of the successful examples to date. 2. A commercial approach is required. Otherwise, there is little chance of sustainability in the long run. If there's no profit, it will soon get CEO attention and shareholder attention. 3. Another absolute must is a state-of-the-art technology platform. The business, of course, is high volume and small margin, and low-income populations are often found far away in the rural communities. So, for example, mobile technology will be key. At the other end of the scale, we may be using satellites to track the growth of crops. In between, we need a super operational platform for collecting the premiums, administering policies and reporting, and importantly, claim settlement. This must be highly effective in order to keep costs at a minimum. Number 4 is, having said all that about technology, our customers still need a human face to explain, to assist, to represent the brand, and to build trust. So a mix of superb technology and access to company representatives is key. And the 5th point is that no insurer or distributor can do this alone. We need to collaborate across disciplines and institutions, and we need to join forces to succeed. The private sector, the public sector, organizations like SDC, the International Organization for Migration, NGOs can all play a role. Now, the public sector impact cannot be underestimated. Today's insurance laws and regulations are currently built for classical middle-class buyers of insurance, or for businesses buying insurance. That means some of the existing laws and regulations may create unintended barriers to progressing microinsurance. So for licensing, product approval, removal of premium taxes, for example, we need government and regulators to support the intended ecosystem. And the final microinsurance challenge is to reach commercial scale. Globally, we've seen many successful pilots. The proof of the concept has been made. Innovative products exist. The key to success, therefore, is to get all of the actors to dance to the same tune when it comes to reaching the people that need our help. I have high hopes that IndigoDigital can make a difference. And to use an old Swiss Re adage, we are smarter together. Thank you.
Well, hopefully that gave you a flavour. I think, as you can see, we're now coming down into a much tighter funnel and talking about some specific areas, and I think some of those points I'm sure will come up in our discussions this afternoon, not least government and regulations. Very hard to talk about anything without that these days, but I think also the scalability point, because at the end of the day, if this is to be commercially viable, then scaling what could well be excellent. That's Rudy. Right. Well, thank you actually for being so compliant and coming back so reasonably. So that's much appreciated. After the sessions we had just before lunch, we're now going to start this afternoon with a testimonial from Dilip Rata of the World Bank. I think many of you know he's head of NOMAD, which is the Global Knowledge Partnership on Migration and Development, and he is often used as a spokesman around remittance matters within the World Bank. So we're delighted that he sent a video over to us, and we're going to play that now, and this will set up the next session after that, which is really the main course. We've just had appetizers so far, but the main course of today, which will be from Bernd, and we'll introduce him properly in a minute.
Your Excellencies, dear friends, I wish I were there in person to be in this meeting. Unfortunately, for various reasons, I can't be there, but it's a privilege, it's an honor for me to be able to participate in this meeting, even virtually. I have had the privilege of getting to know IndigoDigital from its early days when it was still a seed yet to be planted in the soil, and I'm very happy to see the progress, the fact that it is now about to flower and bear fruits very soon. My few words would be about highlighting the importance of remittances to the global development agenda. Globally, there are 250 million international migrants. There are, of course, another 750 million internal migrants. That makes 1 out of 7 people in the world as migrants. And they all send money home, and that tends to be the most important link between migrants and development in the countries of origin. So remittances are very powerful for development, and I am happy to note that by now they have been recognized as such, as an important agent for development. Remittances now this year are likely to reach 440 billion US dollars. Even at that level, they are about 3 times the size of official aid. They tend to be stable flows. They tend to be even counter-cyclical, so a country has difficulty, that's when remittances go in even more, like in the case of Nepal, which faced earthquake recently. Remittances are truly sort of an insurance for a lot of poor people. They are a lifeline to a lot of poor people, and yet we know that the remittance channels are not really that efficient, and that's where there is this need to make the remittance channels cheaper, more efficient, and more development friendly, more friendly to the poor people. So in that context, one would sort of think about the global remittances agenda as having 4 distinct components. The first part is just to get to know the data, the size of the flows, the counter-cyclicality, the development impacts, and a bit about the institutional mechanism, the market mechanisms, the market for remittances, that sort of those are sort of the facts, the stylized facts about data and policies. That's the first component on which we have made a lot of progress. The second component is about facilitating remittance flows at the retail level. So retail payment system issues, making the flows more efficient, the channels more efficient, the channels more competitive. And in that context, we have one roadblock in the form of money laundering regulations that are constraining the introduction of new technology. And we also have the problem of exclusive partnerships that a large number of post offices and national bank branches have entered into with large money transfer companies. That stifles competition. So we need to open up the partnership. In other words, there is this need to build an efficient remittance platform and make that efficient, cheap, and friendly for the poor people. There is the third component, linking remittances to financial products for poor people by linking remittances to saving products, to consumer loans, to housing loans, and to micro insurance products. And then the fourth component would be linking remittances or leveraging remittance channels for huge capital market activities like issuing billion-dollar bonds for development projects, for improving the credit rating, sovereign ratings of countries. Of course, for that, you also need the remittance platform so that you can reach out to the diaspora and sell the diaspora bonds or measure the remittance flows properly so that that can be accounted for in the risk rating analysis and the risk rating of the country goes up. So overall, among all these, I have felt that we have not made much progress on the third component, on linking remittances to financial inclusion for poor people. And in that agenda, there is a lot of work that still needs to be done. And I think we can do it. There is the technology, there is the willingness, there is the goal to improve financial inclusion for everyone. So let's take this opportunity, and I hope that with our efforts today and beyond this out there, working together, we can achieve that goal. So thank you again. Goodbye.
Great, thanks to Dilip. I'm sure we're due for one of the regular migration and development updates that get published biannually by the World Bank, by Dilip's team, which give us everything we need to know on hard numbers that we can then use in all sorts of presentations that we do for the subsequent 6 months, and everybody knows which version of his numbers they've actually seen. We're now going to do a system handover, so if anybody is desperate...
Your Excellencies, ladies and gentlemen, let me thank you first of all of you, for being here today in Geneva. You've made an extraordinary effort to come and share this conference with us, to talk about the world of ID, which is really a world of migration and development. Before we get started with the main presentation, I think a few words of thank you are in order. First of all, we'd like to thank you at SDC, represented by Ambassador Greminger, the Deputy General, Director General of SDC, and also Markus Reisler, the head of the Global Program for Migration. We'd like to thank you not just for your presence as sponsors here, but really for being with us for the last year and a half to 2 years now. Not just for your presence, but also for your patience and for your guidance in terms of how to make a private-public partnership work. We certainly still have a lot to learn, and you're helping us tremendously with every day that we progress. So thank you very much. Without you, we wouldn't be here. Secondly, Director General Swing, we'd like to thank you and the Organization for Migration for being with us since the very onset. Thank you also, Director Reed and Rudy Maxwald, for organizing this tremendous event. Again, you've seen the project on very early on, and we think that the cooperation is progressing extremely well, and we thank you for that. Thirdly, we have met an extraordinary gentleman very early on, Jacob Kellenberger, former Secretary of State and President of the International Committee of the Red Cross. He does not need any introductions. Everybody knows him. And you were one of the gentlemen who got to know us first as we were starting. And we didn't have much. We had a vision, we had some ideas, and we presented them to you. You listened to us, and you decided to open a few doors for us, which were extremely important for us, which we could not have opened without your help. Among others, introducing us to the gentleman sitting on your left. You also introduced us at the highest levels of the EU Commission, which was quite something when we came to Brussels as Swiss, you know, and as they saw it, a private Swiss entity. It's not every day's thing that they see us coming. And they were also very open, thanks to your generous introduction. So thank you very much, Mr. Kellenberger. Finally, we'd like to thank a gentleman who's not here today, Martin Dahinden, the former head of SDC, today Switzerland's ambassador to Washington. It was actually at a dinner organized by the president of the Guillet Foundation, who is among us today, Régis Burrus. This was a dinner held at the World Economic Forum in Davos 2.5 years ago, which was attended by Mr. Burrus, by Martin Dahinden, and among others, the CFO of Nestlé, the CFO of Siemens, and a few other people, as part of the Global Compact program. And after the official dinner was over, we started talking about some of the serious shortcomings of the international financial system as far as migrants and poor people are concerned, and this is really how the entire idea of IndigoDigital got going. So to all these gentlemen, extraordinary gentlemen, may I add, and organizations, a big thank you, because without you, we wouldn't be here today. In terms of a summary of what we actually do at IndigoDigital, we have found an extraordinary quote from the lady running the World Bank. She is COO. Some of you may know her, Dr. Indrawati. She used to be the finance minister of Indonesia. Today she's basically running the World Bank. And we have not been able to find a quote which is a better representation of what we actually try to do at IndigoDigital. Being able to save, make non-cash payments, and please note the non-cash payments, send or receive remittances, get credit or get insurance, can be instrumental in raising living standards and helping businesses prosper. It helps people to invest more in education or healthcare. This is exactly what we do. I will share with you a document which is not on here, but which I would like also to highlight. In this brochure written by the Agence Française de Développement and the African Development Bank a couple of years ago, reducing the cost of migrant remittances, their recommendation is as follows. Let me read this out to you. The establishment of a payment institution specialized in north-south money transfers via mobile banking, account-to-account or account-to-e-wallet is essential for rapid attainment of the goal to reduce remittance costs in conformity with the decision of the Cannes G20, ensuring increased flows and helping to improve financial inclusion in developing countries. You will find this brochure lying there. Take a look at it. It's recommendation number 9. And obviously this is something that we're taking up with the colleagues in Paris to make sure that they will become a part of IndigoDigital. You got the message. IndigoDigital is about helping migrants and their families. So we figured before looking at migrants, we had better understand what migration is and where migration comes from. So if any of you has ever wondered who was the first migrant and actually what the reason was for the first migrant to start his migration, this is it. This is how human migration got started. Without a joke, this is the early migration map that some of you may have seen. Migration is probably as old as mankind. In the early days, it should be noted that Europe was actually colonized by Homo sapiens coming from Africa. Now, there are some experts here in this room. I'm looking at Markus Reisler, who are much better placed, thanks to studies in, I believe, anthropology, to give us much more detail on this. But this is something to be kept in mind when we look at today's migration crisis and today's flows of migration. Europe was colonized about 40,000 years ago, and South America, which was about the last part of the continent to be colonized, about 13,000 years ago. In more recent days of migration, let's go back a few hundred years, we can see some major flows of migration, which went on the Asian part from China south to Malaysia, what is today Singapore, Indonesia, as far as Australia. Some small migration flows from Japan, for example, to Peru. Some names like Fujimori, stay in memory. And some huge migrations from Africa to Central America, as well as from Europe to North America. And that migration from Europe was, as we all know, not, well, in part driven, I guess, by adventure, but largely driven by poverty. We think about the Irish potato famines, which has driven millions of Irish across the waters in experiences, personal experiences. Part of my family is Irish and Irish Canadian. So I know the ordeals that some of these people have done when they left Ireland and landed in the US, the new blessed country for them. So migration has been around, it's often been driven by poverty, and this is something that we want to aim to do something against, the poverty of migrants. When you look at migrants, this is an important relationship, this 1 to 4. One migrant who's made it to France or to Germany or to Switzerland or other countries is generally supporting, on average, 4 dependents at home. That means that if you look at it from a global perspective, you have internal migrants, as Director General Swing mentioned, about 740 million of them. It's a huge chunk of the population, and we can actually offer them also some solutions. But mainly we're focusing on the right-hand side, which are international migrants, the 240 million which are living in a country different than their country of origin. What is the problem? Well, one of the problems, if we try to portray it in a somewhat unorthodox way, is that trickle-down doesn't work. And the transfer system, as we know it today, is a typical problem of trickle-down economics. A lot goes in and little comes out. It's not just the 10%, which has been mentioned as the worldwide average, or let's say the average in some regions. The worldwide is effectively at 8%. In Africa, it's somewhere between 10 and 15%. And not just that, but the Asian Development Bank has, in a report, which we think is very important, found out that after the cash gets collected, because it's essentially a cash economy and cash transfers, after the cash is collected, another 20% is wasted because of loss, theft, alcohol, and prostitution. So it's not just about the transfers and the inefficiency of transfers and the high cost of transfers. It's also about the attrition cost of what happens afterwards with the cash. Cash economy, and this quote is not from me, it's from somebody much more intelligent and much richer than myself, Bill Gates, and we'll come back to Bill in just a second. Bill Gates said, quote unquote, cash is the biggest enemy of development. And I think he has a very good point. This is another way of putting it. There is a lot available, a lot of resources available, but not enough is actually reaching those who are in greatest needs of these resources. Putting it in numbers, I'll go fairly quickly because we've heard these numbers before. Sorry, I'm just going to try to remove this. Okay. I'm going to put this in numbers. You've seen the cost of remittances. The second point is the EIB has done a phenomenal study on their so-called MPCs, Mediterranean partner countries. So these are the countries from Morocco right through Jordan, including Egypt, Libya, Tunisia, and Algeria. And they have come out with the result that about 28% of the population of these MPCs, provided that you exclude Israel, 28% over the age of 15 have an account at a formal financial institution. So 3/4 of those populations are financially excluded. An estimated 4 billion people are uninsured. That is worldwide. That comes from a Swiss Re study, Sigma. The Overseas Development Institute has looked at this remittance problem of high cost and has effectively called it as an African super tax. And I'd like you to keep in mind this word taxes, because effectively